At this point, it looks somewhat similar to what we saw in August. I think the fact that it happens to correspond to the beginning of a year probably adds to the angst.
August of 2015 or August of 2008?
Or August of 2011.
It matters, though. If it's 2008, I want to know.
I don't think it's 2008. Okay. I don't think the leverage in the system.
There's an August every year, right?
There's an August every year. Well, no, some years have been better than others, but I think the proximate cause being the initial devaluation of the Chinese yuan and the activity and actions around some of the leaders there, which I think maybe have done more damage in terms of confidence than have helped the situation.
But I think we're probably wondering what's really happening with the Chinese economy. Do you think that this is a reflection of a severely weaker Chinese economy than we had all anticipated?
Our view is that the growth will continue to slow, but this is a soft landing scenario, not a hard landing scenario. So at this point, the fundamental connection between the U.S. and Chinese economies is still relatively low. About 7% of our exports go to China. Only 12% of our economy is export-oriented. So if you do the math, it's less than 1%.
A soft landing here or a soft landing in China?
Soft landing in China.
Yeah. Well, then we'd have a real soft landing here.
Well, I think we're already in a soft landing here. We're in a below-trend growth environment, and I don't think we get out of that below-trend growth environment.
I broke my spine in this soft landing this week. Are you sure it doesn't feel that soft to me?
I think soft recession risk is not zero, but I think it's maybe less than a 25%
If it's already
chance.
An industrial recession, does it matter?
We're already in an industrial recession, but manufacturing is 12% of the economy. Services is 88%.
So it's not a consumer recession?
Not at this point. The contagion is the concern here.
If I lose my money at Schwab, will you pay me back? Is that what your ads say? Isn't that what
it all comes from me personally. That's my.
No, but those are your ads. Remember, the kids are asking their parents.
I'm not going to talk.
Kids are asking their parents, and it doesn't work that anymore. If you lose money, do you get it back? And they go, well, if you do it, Charles.
There are certain fee rebates, but I am not the corporate spokesperson.
Fees? You're not giving me my principal back?
I didn't even know there were fee rebates. Steve, I got a question for you. Joe mentioned that he said, what can the Fed do? What can the Fed do?
Oh, haven't they done enough?
I think there's a couple ways the Fed is going to react. First, it's going to look at the situation. It's going to ask itself, am I looking at a financial problem or an economic problem? And if it's a financial problem, I think the result is that it will slow down the pace of tightening. If it's an economic problem, what it can do is by policy statement, it can eliminate tightening. So there's two things that are built in. Well, the first is built. It's a schedule of tightening that has a certain rhythm to it in the mind of the market, and those are two somewhat distinct levers that the Fed can remove.
The U.S. financials and the U.S. economy.
Well, it's going to look at and all I can tell you is what Fisher told me yesterday, which is pretty much the same as what Williams said to me on Monday, which is that they look at these things, they take a step back. They do not panic from a 400-point move, and they're not so. Well, I think that's right, Joe. In that I think there's a feeling they perhaps overreacted in August. I don't think they're necessarily sorry they went and they didn't go in September.
Negative tightening. When do they do that?
Well, that's something that's on the table. It's being used in Europe. Fisher spoke against it and San Francisco at the AEA conference.
He said we might do it, though, to you yesterday.
Well, he said it's out there, but he doesn't think we're going to go there.
I didn't really mean that, negative rates. I just meant the word for easing.
Additional QE.
Negative growth. Not necessarily QE, but going back from the quarter. We don't know. They could end up going back from the quarter.
They could end up going back. I think they're a long way from that, Joe. Yeah. And I think what we're looking at here.
4,000 points away.
There is some number here where the data, where it's happening in the markets begins to affect the economy. But what we're at here is we're at a little bit below trend. If the trend is 2.5, we're doing 1.5 in the fourth quarter. And I think there's an expectation that we have something of a bounce back in the first quarter. And so you can think for the next tightening if it happens to be somewhere at the end of the first quarter, beginning of the second.
Hey, Jeff, why don't you weigh in on this? What do you think's happening here? Because people are waking up at home and wondering, is this a buying opportunity or is this a scary situation where I should step back and kind of wait and see how things shake out?
Well, I wish I could say I'd predicted it, but as you all know, I was looking for a Santa Claus rally and a pretty strong end to last year. And
the faces are ripped off, Jeff, but not from going up.
Yeah. Exactly right. And it was a cacophony of exogenous events. It began with the $1.2 trillion option and futures expiration that upset the rhythm of the rally. But we gathered our strength and came back the next week. And then you've been hit by this potential war between Saudi Arabia and Iran and the Chinese slowdown and the H-bomb out of North Korea. And the markets look like they're in a free fall right here. The market is oversold on the McClellan oscillator on a short-term basis, but it feels like we're in one of these selling stampedes, and they typically last 17 to 25 sessions, and this would be only session 6. So I would be more cautious here.
Hey YouTube fans, I'm Landon Dowdy from CNBC. Thanks so much for checking out our channel. Here you'll find videos packed with all the info that you need to be smarter about your finances. Be sure and subscribe by clicking right here, and click on all the videos around me to see CNBC's original series, Young Money, Tech Bet, Kramer's Mad Money, and all the latest from CNBC.